Good morning, everybody, and welcome back to the Wilton Report. It is our first broadcast of 2025. Hard to believe, another year has gone by, and in a letter I was writing to somebody about the real estate market for 2024, which we're going to break down. I said 2024 was the real estate market that wasn't, and we're going to go into what that means here on the Wilton Report. If you haven't subscribed, I obviously urge you to do so. I also invite your comments and feedback wherever you're listening to it, on Spotify, YouTube, Apple Podcasts, etc. It helps the broadcast reach new members. And if you are feeling so inclined, you can share it on social. So that's it. We'll get started. Again, I'm Josh. Big announcement is that on the 25th, we are going to do a county-wide breakdown of 2024 and a very, very thorough forecast of 2025. We're going to do a mini version of that today. But again, it's Saturday, January 25th, 10:15 a.m. in the morning, which is next Saturday, which is amazing. And I highly invite you to come to that session. And we're going to get really deep detail on the market. So just as a reminder to all our landlords, we have a lot of different businesses, not a lot, we have several different businesses. And, one that I'm very proud of and excited about for 2025 is Princeton Property Management Services. We've come a long way with it, and our service levels are extraordinary. So if you're a landlord, I highly encourage you to check us out. You can just Google us. So I've been tracking inventory, as you know. I do it rather formally and loosely here on the podcast. So back in June, which is sort of peak inventory season for Princeton, or for the markets really, there were 57 homes for sale, 47% of which were above $2 million. And then you fast forward to July, it dropped to 47, pretty natural decline, jumped back up to 57 in September, pretty normal. 43% of the market above 2 million. September, it went to 58 on the 29th of September, 40% of the market basically above 2 million. 11/15/24, 52 homes for sale in Princeton, 50% above the market. Fast forward to 1/17/24, which is today, 37 homes on the market, 56% of which is above 2 million. So amazingly, the inventory situation has gotten worse, not better. We actually hit the low 30s, high 20s at the end of the year, which is, again, a second year in a row of incredibly low inventory for Princeton, and not only Princeton, the surrounding markets, which we'll get into. So let's take a look at 2024 and let's kind of recap that. We're going to do a little bit of forecasting today. But again, if you want the full forecast, please attend the market seminar on the 25th. We'll go into a lot of detail as to what we think is going to happen nationally and locally. So this is from my friend Lance Lambert. New Jersey is 61% behind 2029 in terms of standing inventory. You can see Texas, Florida, Oregon, Washington have some inventory. I think there's a total of 9 states that are above pre-pandemic levels of inventory. New Jersey is 60% behind. Why? We are a built-out state. There's not a lot of land. We do the Highlands Act. It's difficult and expensive to build in New Jersey, as it is in a lot of the East Coast states, as you can see from the map. This is a national inventory tracker. I think this one's a great one to look at if you're listening to this. In December of 17, there was 1.1 million homes for sale in the U.S. Fast forward to December of 2021, which was the worst. We went down to 445,000, which is really, I'm laughing because it's just amazing to look at that number. And then you spikes back up to 871,000. So nationally, it's basically doubled since 2021. Unfortunately, locally on the East Coast, we're still over 50% behind where we were pre-pandemic. So if you look at this particular graph, the states that are above pre-pandemic levels, Utah, Idaho, Washington, Oklahoma, Florida, Tennessee, Arizona, what do they have? Colorado, what do they have that we don't have? Land. That's it. And obviously, it's more inexpensive to build. You kind of go to the middle part of the graph, Nebraska, Alabama, Georgia, California is in the middle, believe it or not. The bottom of the graph, New Jersey's third from the bottom. Connecticut is the worst state in terms of being below pre-COVID inventory. So New Jersey, second from the bottom. Maine, 1, 2, 3, 4, 5 from the bottom. Maine got very expensive these last 5 years. Used to be pretty cheap, not anymore. So looking a little more locally, so Bright MLS, if anybody is not familiar with Bright MLS, it is the MLS that we subscribe to, one of them that we subscribe to. It covers Mercer County south through DC. The chief economist of Bright MLS, Lisa Sturdivant, who's sharp as a tack, is predicting a 12.8% rise in inventory. Nationally, the pundits are looking at like a 13 to 16%. So she's predicting less. Interesting statement that inventory will grow more slowly in 25 than 24, which is ominous for towns like Princeton, primarily because of activity in the new home market. There's been a slowdown in new home construction. So this particular graph came from Lisa's presentation. The blue dots on this graph, of which New Jersey has 2 of them, one in the New York, as I say, northeast corner of New Jersey, and one in the Princeton southwest corner of New Jersey, are expected to increase in price. The only places you're going to see declining inventory and declining population in New Jersey is probably Gloucester County, maybe Atlantic County. You may see some declining population, and I don't think you're going to see major price changes down there. However, our market is predicted for more price increases. I happen to agree with that. North Jersey is, it looks like, one of the most bullish places in the U.S. other than the capital, and Boston for price increases. So it's going to be another wild ride over the next year to buy. Just want to do a little bragging because it's my show and I can. So Queenston was started in February of 2021, and we took a different philosophy. We only work with what we would call very established associates in the market. We don't hire new people. A little bit of a different philosophy than the traditional brokerage house. And these are our results since 2021. As you can see, in listings in Mercer County, we've grown 140% since we've opened in 2021. Obviously natural to do that. However, when you compare it with the lack of growth amongst the more mainstream brokers, and my former employer, 𝐂𝐻𝐿, is down significantly, too bad for them. It just shows you that you really, as a consumer or even an associate, want to align yourself with a very professional sales organization like Queenston, because we only hire the best of the best of the best. That's listings. This is buy sides are up 245%. And you can see the market's down. So not only are we up against the market, but we're up against everybody else. So very proud of that. Very proud of the people that we work with. We have an amazing team here at Queenston. So let's jump into West Windsor and talk about and show you the market that wasn't. So West Windsor, for the first time in its existence, has broken an average sale price of $1 million. Again, I would have bet that never would have happened. But I have the curse of memory, right? As we all do. So 2012, you could buy a house for $563. Single family home in West Windsor. The average single family home price now in West Windsor is $1.01 million. Really incredible. West Windsor seeing a very dramatic jump. It's probably one of the toughest towns to buy in the state, if definitely not the county, through COVID. It's very, very tough. Good high schools, transportation, good housing stock, etc. So when you look at the days on market, it's at an all-time low. It took an average of 16 days to sell a single family home in West Windsor. Compare that with 81 days in 2012. So 2012 was coming off the Great Recession, sort of like the beginning of the end of that phase. And then you sort of went into a normal phase, right? 65 days, 75 days, 74 days, 67 days. Boom, COVID, post-COVID, 31, 21, 17, 16. Brutal. Brutal for buyers, great for sellers, brutal for buyers. So this is really the big picture. I think this slide is of all the data that we do track locally here at Queenston. This is the most important. Only 117 single-family homes closed last year in West Windsor. That is not due to lack of demand, obviously. That is due to the lack of supply. If you have subscribed to the show in the past, which I hope you've done, if you have a 2% rate, you're not selling it into a 6.5%, 7% rate. We'll talk about rates and where they're going at the end of this show. But last year was a record low for West Windsor in terms of units sold. Maybe it goes back. We only track it to 2012, but maybe it goes back to when it was a farming town and there was no houses for sale. Houses, single-family homes in West Windsor sold for an average of 104.5% last year. And this is a really, really telling, maybe disturbing graph. 2022, the average condo townhouse price in West Windsor was $558. Last year was $835. So let's talk about that. They did bring on new construction townhouses in West Windsor, which were closer to an average of $1 million than not, right? So there was more supply that jacked up the average sale price. However, homes still sold in an average of 18 days, which was a low since 2012. The peak was 68 in 2020. The supply in West Windsor, I will say this, the number of townhouses that sold last year, 2024 versus 2023, was one of the few bright spots in the market, meaning that the average transaction count for the townhouses and condos in West Windsor was up 20%, which is significant. Why? Because they built housing. When you build housing, it alleviates supply issues. It allows people to buy. It allows people to move. It allows people to get married, get divorced, get promoted, demoted. All of those things that are not happening with the absolute low supply that we have. Jumping to Lawrenceville, the average single-family home price in Lawrenceville is $650. I'm going to take this back before next Saturday to 2012. Take a look back at where we were. Actually, I'll take it back to 2008 for all of this data before next Saturday. So we'll see pre-Great Recession through today. I'll have a pretty clear look, but it's increased over $200,000 in 5 years in Lawrenceville. Lawrenceville is a huge municipality, stretches off across a huge geography. At some point last year, we were down to 23 total units for sale in Lawrenceville. Absolutely brutal for buyers in Lawrenceville. So West Windsor condo townhouses sold, again, went from 44 to 61. So you can see when you build houses, people buy them. And, generally speaking, NIMBYism sets in once you buy your house. Once you buy a house, you're like, nobody else should be allowed to build, even though you're living in a house that somebody built. So get over it. Let's take a look at Lawrenceville in detail. The average days on market for single families, 31 versus 54 in 2020. Homes sold, 165. It's a little bit cut off. You can see in 2021, there was 271 single family homes sold in Lawrenceville, dropped to 165. That's absolutely significant. It is a little bit up over 2023. So 2023, there's 146. Last year, 165. So that is an improvement. We will continue to track that throughout the year. Cranberry, $894,000 single family home price. Cranberry, again, Cranberry is a weird town in that it is very small. We'll show you the transaction count, which is almost non-existent. So in 2012, the average single family home price in Cranberry was $709. They've brought a lot of housing stock on the market in Cranberry, believe it or not, despite it being a small town. So the price is at $900, let's just say, in Cranberry, which again is incredibly high. Days on market in Cranberry. Cranberry never sold fast historically. There's some houses in Cranberry that were historically difficult to sell. The older houses on the main roads, inclusive of Main Street, they never sold overnight. Why? Older houses don't sell as fast as new ones if you're buyer pool. Last year was the third fastest year since 2012, with 60 days on the market. But if you look historically at Cranberry, 210, 188, 183. So it was never a town where things flew. In certain neighborhoods, yes. In the older homes, it did not. This is the big picture in Cranberry. So the number of single-family homes that closed in Cranberry last year, 22. Now, the high was 2016, right, at 43. But last year, I can tell you, and we have associates here who do a lot of work and live in Cranberry, things are trading off market. An associate will get a house. They'll go to their buyer pool. They'll move their buyers into a house. It'll sell well above asking price. It's that competitive of a market in Cranberry. Let's take a look at Princeton. Princeton, single family average sold price, $1.727 million. So there you go. I don't know what else to say. In 2012, it was $1 million, was an average single family home, 1.7 million. Things were selling in the single family home class at 104% of the asking price. Days on market dropped to the second lowest to 36. High, again, normal 71, 69, 74, 72, 71. Boom, 36 in COVID. This is the big picture. Single family units, homes sold in 2021, 283, which was a high from 2012. An average year, 229, 230, 253, 245. 182 in 2018, significant drop to 139 last year, well below even 2023, which I've been predicting all along. We'll talk about what I predict at the end of the presentation. If you look at the under $1 million sale price, the average single family home under $1 million is $847. This is the big picture. 21 single family homes sold in Princeton under $1 million in 2012. There's 130. Why? It's just more expensive. That's all it is. Demand and supply and all the other stuff. Listed sale price ratio. Obviously, the under $1 million market has the highest listed sale price ratio. Basically, 107% of the asking price is what the average consumer paid to buy a home in that price segment. When you go to 1 to 1.9, again, the single family average sold price in 2012 was 1.354 million. You fast forward to 2024, it's only 1.463. I say only, somewhat tongue in cheek. The days on market was at an all-time low. It used to take 172 days to sell a house between $1 million and $2 million. Last year, it took 25 days, year before 30, year before 43. This is the big picture. Only 57 homes sold in the $1 million to $2 million price segment. Average, hard to get an average because, again, the majority of the houses in Princeton didn't used to be over $1 million, and then that shifted post-2012, right? So the peak was 2021, right, which is a very robust market, and then it's down to 95 and 57. So just not a lot in that price point. Super high demand, super competitive, especially Riverside, Littlebrook, close to town. I would say east of 206, incredibly high demand. When you look at this listed sale price ratio, what consumers spent, they spent an average of 107% to buy a home in the $1 million to $2 million ratio. So if you're not bidding at that, you're going to lose. Just is what it is. When you look at the above $2 million average sold price, the average price came down from $3 million in 2012 to 2.53 million, but that's a little bit misleading. Days on market's at an all-time low of 59, right? Here's the issue. In 2012, only 11 homes in Princeton sold above 2 million. Fast forward to 2024, it's over 50. A little bit cut off on the slide. So what does that mean? It means the house that used to be $1.6 million is now worth 2.4, 2.3. I was sitting with somebody last night. They bought a house, single family, newer construction in town, right off of Tree Street, $999, I think 6 years ago. I told her it was worth 1.7 without doing any research, just back of the napkin. So that's how significant price gains have been all across town. And again, even though there's more inventory in this price point, homes still sold at 101% of the asking price. So I will break it down. I would say there's a little bit of inventory. I don't want to use the word glut, but there's definitely a fair amount of inventory above 3.5 million. A lot of new constructions, a lot of builders building super expensive houses. We'll see how that plays out. Again, the condo, this is actually not even funny. I don't know why I'm laughing. I'm laughing out of frustration. In 2012, someone could buy a condo or townhouse in Princeton for $516,000. Maybe they wanted a single family, they couldn't afford it, whatever, transitional house, up, down, upsizing, downsizing, divorce, marriage, whatever. Last year, it was $1,099,000. So that's like a significant jump. That's double. That's double. So Princeton needs more condos brought to the market, and you're going to yell at me, but they're building all these townhouses. People can't build equity in townhouses. People want to buy homes. So what do? Well, petition the town council and the town government to build condos instead of apartments. Better for the town long term anyway. Days on market in that segment up dramatically from 29 to 33 in a year. Used to take 100 days on average to sell a condo townhouse in market. Now it's down to 33. The big picture is the lack of inventory. We only sold 51 last year versus 53 the year before. I'd say the average is 70. If you look at the median, 68, 69, 70, 79, 87. So last year was a really light year. I don't see that particularly changing. We'll go into that just because investors are enjoying their lives right now. And again, when you look at Washington Oaks, you could have bought in Washington Oaks 10 years ago for $430. Now it's at $848. The big picture is this. Only 3 units sold in Washington Oaks last year. So guess what? If you wanted it, you were going to pay. That's supply side economics, right? Greg's Farm, $532. The average sale price came down a little bit just due to lack of inventory. Only 5 sold last year, up 1 from the year before. So what you're seeing across Princeton and everywhere else, Governor's Lane is at an all-time high for average price, 1.1 million. Days on market, 15. Why? They're in good shape. It's well maintained, right? It's close to town. It's in Littlebrook. It's a lot of what people want. Last year, 1 unit sold in Governor's Lane. So pretty rough stuff. So let's talk about 2025. So that's Princeton. If you have questions, obviously you can text me. I'm going to give you my number in a second. 2025 forecast. This is the short version. If you want the long version, if you want detail as to what's going to happen, join in next Saturday to our market seminar because it's going to be gangster. So 2025, third quarter, end of third quarter, mid third quarter, rates will drop to 6.25. So stop the rate, marry the house. Nonsense. It's a lie. Buy your payment for the rest of your life because you may not get the chance to refinance. Inventory will rise overall in Mercer, Somerset, and Middlesex. I will say it will rise more in Hamilton. It will rise more in Ewing. It will rise more in Trenton than it will in Princeton or West Windsor. Lawrenceville will be middle of the road. Hopewell Borough will be light. The far side of Hopewell Township will be lighter still. So, or the closer side of Hopewell Township. So you're going to see, I don't want to say a return to normalcy because we're probably like 5 years away from anything resembling normal in our market. However, inventory will get a little better in terms of what comes to market. It's not going to stick around. There's way too much demand for that. You will start to see state level intervention for starter housing. And I'm not talking apartments, though apartments are being built like gangbusters right now. I'm talking condos, townhouses, ADUs. It's going to become to the point where people can't buy a home here and can't stay. New Jersey, believe it or not, despite the lies you hear, is a net gain population state. You're getting to the point where California lost 285,000 people last year, from what I read. Not good for California, not good for the state, not good for the state economy. New Jersey's, we're not there yet, but you got to build some housing. And California has fought any sort of housing development forever. I do think you're going to see and I'm going to use the word slow down loosely. I think you're going to see a little bit more supply in the luxury price points, especially in Princeton above $3, maybe $3.5 million. Things are still going to sell, still going to be very robust. But keep in mind, on average, it took 180 days, 300 days to sell a house above $2 million, right? Just a few years ago. So I think you're going to see that. You're going to see continued undersupply and insane demand in the lower price points. Anything under $1 million, going to be gangbusters. Anything $1 million to $2 million, depending the part of town and the condition, it's going to sell more or less immediately. You can't overprice it, obviously, but you're going to continue to see that. And again, if you want the full forecast, come to the seminar. I highly encourage you if you're an investor, if you want to be informed, if you're buying in 2025 and you want to be successful, and then you're not at this seminar, I can tell you after 20 years, and I would say of being one of the leading voices in real estate in Mercer County and definitively Princeton, if you're not at the seminar, you're insane. It's free, by the way. How do you come? It's on Zoom or in person. Just text me at 609-773-8054. You can text me anytime for any reason, obviously, or call me, and I'm happy to chat. If you have ideas for the show, things you'd like to see, let me know. You can shoot me a text. And again, if you haven't hit subscribe, please hit the subscribe button, hit the like button, and share it on social so more people can see the Wilton Report. So a little bit of a longer one. We're going to do the rental market breakdown, which maybe is not as exciting for some of you, but for landlords, I know everybody's dying to know. If you want to know what's going to happen short-term with rentals in Princeton, prices are going to soften, but we'll talk about that in a week or two. Okay. Hopefully see you this coming Saturday, or a week from Saturday, I should say. That's it for this week's episode. Thanks, everybody.